You ever look at a professional stock report and feel like you're trying to read another language? With all those charts, numbers, and technical jargon, it can be a lot. Well, today, we're going to crack the code. We're diving into a real analysis report from Meta, and we're going to see exactly how the pros read the signs and solve the case.
This is the big question, right? It's what all of this is about. Every chart, every number, every single piece of data is all trying to answer this one thing. So let's dig in and see what the evidence is telling us about Meta. So let's approach this like we're detectives. This stock report? That's our case file. It is packed with clues and evidence. Our job is to piece it all together and figure out what's really going on.
Okay, every good investigation starts with the fundamentals. Before we call in the specialists and the expert witnesses, we have to look at the most basic evidence on the table, the stock's price and its trading volume.
So if we look back over the last 3 months, you can see the price has been a little volatile. Some ups, some downs, but it's ended up with a slight dip overall. On the surface, it looks like it's just kind of drifting downward. But the real story isn't just what the price did, it's how it did it.
Right, and here's a huge clue for any analyst. When a stock makes a big price move, either up or down, the first thing they check is the trading volume. Think of it like this. If a ton of shares are changing hands on that day, it means there's real conviction, real power behind that move. It wasn't just a fluke.
And this table shows us exactly what we're talking about. Look at the days with those big price drops, like July 31st, the volume, over 27 million shares. That tells us these weren't just quiet, little down days. No, these were major events where a whole lot of people were rushing to sell. That's a big deal. Okay, the basic evidence gives us a solid start. But now it's time to bring in the specialists. We need to hear their expert testimony. In the world of stock analysis, these experts are called technical indicators.
Now, don't let the fancy name scare you. An indicator is really just a tool. It's a bunch of math that looks at the past data from a very specific angle. Some are great at spotting trends, others are designed to measure momentum. Each one gives us a new piece of the puzzle.
So let's call our first expert to the stand, the moving averages. These are one of the most fundamental tools in the box. They basically smooth out all the noisy day-to-day price jumps to give us a much clearer picture of the real underlying trend. Is the stock actually trending up or is it trending down?
And wow, this expert's testimony is crystal clear. Look at this. Meta's current price is sitting below both its short-term 5-day average and its longer-term 20-day average. To an analyst, that's a classic bearish signal. It's like the stock is running a race, but it's falling behind its own average pace. That's a big red flag.
Okay, so the trend looks pretty weak. But the next question is, how much gas does this downward move really have left in the tank? To figure that out, we turn to our momentum specialists. Their job is to measure the speed and the strength of these price changes to see if a trend is accelerating or if it's maybe running out of steam. Now look at this number, 36.97. All by itself, it doesn't really mean anything. But in our investigation, this is our next major clue, and it's a loud one.
So this number is from the Relative Strength Index, or RSI. And this, my friends, is where our case gets a huge plot twist. A reading this low often suggests that a stock is oversold. That means the selling has been so aggressive, so overdone, that the price might actually be due for a rebound. So, wait a minute, the trend looks weak, but the momentum is hinting at a possible comeback. Now we've got our first major contradiction.
And just when you think you might have a theory, the plot thickens. Because just as we're considering a rebound, another group of experts, the trend specialists, steps up to the microphone and they have a very, very different story to tell.
And their testimony is powerful. We've got 3 different trend indicators here, and they're all singing the same tune. Take the MACD, for example. That negative number isn't just showing a bearish trend. It's showing that the bearish momentum is actually getting stronger. The Iran and CCI indicators are backing that up completely. Their message is loud and clear. Don't get tricked by that oversold signal, because this downtrend is the real deal.
So here we are. We're at the very heart of the investigation. We have credible expert witnesses pointing in completely different directions. What does a detective do now? Well, you lay out all the evidence and you start to weigh it.
This quote just nails it. This is what stock analysis is all about. It is almost never a simple open and shut case.
The real skill isn't just about finding clues, it's about interpreting the contradictions and figuring out what it all means when you put it together.
So let's lay it all out, side by side. The case for a rebound, the bullish case, is that the stock has been beaten down too much, that the RSI says it's oversold. The case for a continued decline, the bearish case, is powerful. The price is below its key averages, and multiple trend indicators are confirming that the downward momentum is strong, maybe even growing.
With such conflicting evidence on the table, we can't come to one single, definitive verdict. It's just not possible. Instead, what a good analyst does is they outline the most likely scenarios based on which set of clues turns out to be right.
So it all boils down to 3 potential scenarios. Number 1, the bullish scenario. The bulls win, that oversold signal was right, and the stock bounces back up. Number 2, the bearish scenario. The bears were right, the trend continues, and the stock keeps falling. Or number 3, a stalemate. The stock gets stuck in a frustrating tug-of-war between these 2 levels.
And this might be the most important takeaway from this whole thing. Technical analysis is not a crystal ball. It doesn't give you guaranteed answers. What it does is give you a framework for understanding the risks, for seeing the possibilities, and for weighing the probabilities. It's about playing the odds, not predicting the future.
And the report's own conclusion says it all, really. When the evidence is this mixed, when your expert witnesses are all disagreeing, the smartest move is often to just be patient. Wait on the sidelines, let the market battle it out, and wait for a clear signal before you commit. So now I'm turning it over to you. You've seen all the evidence. You've heard the testimony for the bullish case and the bearish case. Which one do you find more convincing? Answering that question for yourself is what being an investor is all about.